Well, it's now time to look at the details from the floor of the Nigerian Exchange Limited. And joining us live via phone to analyze the performance of the trading is an equities trader at Planet Capital Limited, Mr. Paul Azum. Mr. Azum, good afternoon to you.
Good afternoon. Thank you.
Yes, it's great to have you join us again today. I want to first of all look at the resolutions at the MPC meeting, retaining all rates. Did that affect the market in any way?
Well, I think it was expected. So we are not expecting any significant change in any of the policy rates, and did not have any significant impact on investors' decisions. Before now, since last week, the market has been somewhat bearish, and the process this week we've seen the trend being sustained. Today, again, the market lost 0.46%, but it's not connected with the decisions reached at the MPC meeting. And like I said earlier on, the reason is that those decisions did not come to us as a surprise.
Let me follow up with that as we have the figures for today's trading down 0.46% negative. Our top gainers, we have M Benefits, Cotix, Regalinks, Chi PLC, and Champion Breweries. For top losers, we have Sovereign Inc., ABC Transport, Academy, Royal X, and Wapik. What do you make of this just in?
Oh, okay. I think those are just as a result of normal demand and supply activity in the market for today. Sometimes you have investors who have strong demand for particular securities, and you see that because of the strong demand for that security, the price of that stock goes up. And then today, generally, what shaped the direction of the market was Dangote Cement that lost. Dangote Cement lost 5 naira, and that was significant on the entire market index. And Dangote Cement is a heavyweight in the index composition. It's represented about 70% of the market. And going down 5 naira is enough to sway the market down.
Talking about that, companies are having their AGMs, and we still see one way or the other, despite the challenges and the effect of COVID-19, dividends are being paid to shareholders. Yesterday, Dangote Cement held theirs. What do you make of this, and what's your assessment of all of the figures you're seeing and dividends being paid to shareholders?
Well, these dividend decisions have been announced. Most of the dividend decisions have been announced for let's say, for about 2 months now. So investors have already seen them. It's no longer a surprise. What investors are looking at now are the ability of these companies to sustain or improve on their performance of last year. So investors are looking at the Q1 numbers. They are looking forward to see the half-year results, which will be coming out from July, to see if that results will to justify their increased investment in these securities, or whether they should sell off such securities. So until those numbers reinforces what was seen in previous years, before we have investors flowing back perhaps more income, more funds, the dividends which they got from the previous years into these same securities again.
As we move into the month of June, exactly half of the year, what are you expecting, particularly at this time where many are even looking at the other side as a fixed income space?
Yeah, I think that the market will be, activity in the market it will not have, like we're having now, having something like a bearish market. In the month of June, I think this trend is likely to continue. Market is doing very limited volume. Like today, market is about 1.3 billion naira, which is typically about one-third of what market does on a typical day when market is bullish or when there's a lot of activity in the market. So we may have this trend we're seeing in the market being sustained for quite a while until maybe July, when we start anticipating the release of the Q2, that's mid-year results for listed companies.
It's a good way to leave it. Mr. Paul Azum is an equities trader at Planet Capital Limited. Thank you very much for spending your time with us. We appreciate this.
Thank you. Yeah. Thank you.
All right, Effiong Ekop is in the house. Ekop, it seems worrisome. While we look at today's negative trade, there are also a lot of fundamentals affecting investments. Take us through all of this and what you make of it.
This is the second week that we've seen straight negatives, all around the trading. It is obvious that investors are carrying heavy weights of negatives, and it's affecting their ability to, pull huge number of shares, even though they are really very, very cheap. So if you go to the market now, and even you extend to have feelers of the economy, this insecurity thing that we are talking about is key now. It really exerts great influence on investments. And you have other negatives that are also affecting investments, and they are not allowing, investors to really display the creativity that they have and they want to do in the market. Think of inflation that we've had above 18%. That really is another issue that affects investment. Our unemployment, up to about 33%, somehow. You talk about the weak exchange rate. So if you put all of this in a basket, you see that they influence ability to do great investments in a negative way, and they reduce the appetite for investment. Investors, to pick and then move in the positive direction. So these are the things that make our market to appear weak, even though the fundamentals of trading companies are really good. But those companies need to take some things from the larger economy to be able to do their businesses. Think of infrastructure, poor electricity problem. Our roads are not really very good. So if you add to these other things that we've mentioned, then you can imagine the investment environment. That is the issue. And so when we talk about foreign capital coming in, those foreign investors bringing in dollars, they have to discount on this issue, our national risk, to investment. So when we talk of all of these things, they affect investment. That is the reason we look forward to government to do so many things to help investors, to help entrepreneurs, businessmen to stay afloat, to grow the economy. Do you understand? Key, as one of the guests said, is the insecurity thing. People can move about from one state capital to the other. People can go to their farm, and even if you sleep at home, you are worried about what may happen along, within your environment. This is not good enough. In a good environment, you can do business during daytime or in the night. Yeah. Do you understand? How many people would risk going to a particular place to hold meeting and come back, say, after 10 o'clock? Is it possible? So those are the issues. So the stock market is not operating on its own. The stock market operates within the economic environment. And if the economic environment is not right, it certainly affects the investment level. That's what we are saying. So for now, investors are just staying on, playing the periphery level. That's why you see the sales window is very, very hot. Every day people want to, take back from their investment. See the volume that we trade for 2 weeks now. They have been so, average. You just have maybe about 2 or 3 million shares in a day. And then the value now, less than 2 billion each day. This is something that we used to cross between 5-6 billion in a day. Do you understand? Volume gets to 7-8 million shares. It is all that we have within the environment.
Now, today's trading in particular is again down 0.46%. I'm looking at some of the gainers. We have the champion berries from your end there. We have Chi, PLC, we have Regalings, we have Cortex, and then Benefits. Can you speak to some of this?
You can see that some of these companies, even those that talk about gaining, the gains are just marginal. And the big players, those companies that have great muscles that when they come to the trading floor and then you just watch what they want to do, they are taking the back seats. Do you understand? So these are just companies, well, we say they should just come in, and then the gains that they make, if you put all of them together, they don't have the weight to influence what Dangote or Nestle or Guinness would have been able, to do. But I'm not saying they are not companies.
Yeah.
They are. Those ones are taking the back seat because things need, to be done. We are talking of companies that if they make a move, they influence a sector. And they can also influence activities on their subsidiary levels. Do you understand?
Let's wrap up on this note. Aside insecurity, which we all have identified, do you also see any moves maybe by the regulators or maybe by the exchange limited itself, now the exchange group, that can also help attract investments? Are there any things they could do at this moment that could maybe not totally change the narrative, but maybe just help to maybe attract more people to list and all of that?
I have seen their efforts working with the Securities and Exchange Commission, and then Securities and Exchange Commission going through the National Assembly to persuade them to do something. 2-3 weeks ago, I read in the paper that they were talking about the cryptocurrency thing, the issue, the reason to put in rights regulations
in place.
So that's the best way to go. Persuasion, it is the federal government that really holds the S. Do you understand? To do it. So they're the regulators in their own little ways. They have guided the markets. They have guided the regulators, the traders, with rules very well. So the government needs to do its own. And that's the big one, is this insecurity.
It's a good way to leave it there. My colleague, always good to have you in the studio, Effiong Ekop. Thank you very much for your analysis.
Thank you, Tulu.